Okay, so it is a Sunday recap for the 8th of March 2026. I took three trades, that's two wins and one loss, and the one loss this week is because I did not indeed follow my plan, and that is exactly what we'll be focusing on today. So, if we just run over the first position based off of Monday, we had a really, really good trading opportunity, and we saw this one all the way out. Particularly happy with the trade position. We did minimize or kind of restrict the TP based on current price action, but it's still okay because it made sense with the risk to reward that we had on price action. I kind of realized that price was a little bit too aspirational here, and it didn't give me a full confidence candle closure on the 1 hour for me to take the full TP, and rightfully so, because afterwards price action would have come back down to tap your break even, which would have stopped me out before price rallies to your full take profit area, and it all made sense. So a really, really good solid trade to start the week off on Monday, secured 189 pips. And then for Wednesday, midweek, we had another trade position and it looked something like this. So price action started to pull up, and at this risk off area is where we were looking to say, right, well, price needs to start breaking this. And we stayed true to the colors, we stayed true to the plan. The plan was followed, price action continued to push up, and then once it created the support off that risk area as a support, and it pushed all the way up, plus 160 pips. So no concerns there. Those two positions were very, very solid. But then Thursday is where things kind of went a little bit downhill. And that was because I was too overly confident with the trade plan that I completely got carried away and I completely forgot of the original plan structure. So originally I wanted a break of the highs on the 15. And that was where was it? It was something here, somewhere here. So we had the original break of the highs, which is what we wanted to get into. And then we kept seeing, right, well, they're not really quite the closures that I was expecting. And then once price action created the support, we were looking at taking another buy on a rebreak at the highs of the 1 minute time frame. That wasn't the plan. The plan was to get in on the rebreak of the high, because why? You're utilizing momentum. You're taking advantage of all of the break of the highs momentum. So you've got the hour, you've got the 30, the 5, the 15, all breaking highs, and you're getting a wick fill. So it makes sense to start taking the buy off of this level here, not this level. Oh, sorry, this level here, not this level. And because I was so fixated on looking for the entry opportunity, the entry validation, I kept saying, right, rebreak of the highs on the one, rebreak of the highs on the one. I lost track of time, so I entered the position 1 minute before the 4 p.m. candle open, which is London close. Price action then just gave you a closure that actually was ass. The 1 minute time frame that we got into was a 5 minute candle closing top wick. What do we know? Price action will most likely provide you a fake out. Well, I was in the trade, so I had to stick through it. I was considering closing out, but I didn't because I said I wanted to stick to the plan. But I understood when I took the position that it wasn't actually the plan. So got carried away with the 15-minute momentum. I forgot about the actual trade plan. I executed way too late, and I should have waited for the 1 hour open. The plan was not followed. The entry was completely out of the spectrum from my original plan, but it made sense that it came to stops. So it's all good. It's still data nonetheless, and I know that if the plan is not followed, the result is all based on luck, and that's exactly what it is, because today the probability, or Thursday's probability, price action will stop you out because your entry is absolute ass, and actually the entry validation that we had wasn't valid. So those were the three trades we took. Friday had no trades taken, but there was opportunities in the market which I didn't take advantage of. And that's that. So if we just look at the data of the sheets that we have, we're still up. This is the first week of March. We're up 256 pips. So we had actually peaked 349. We took that one loss, and the one loss is because we didn't follow the plan. Um, it's still an evaluation. It's a challenge phase. We're not funded. We haven't passed anything. This account we've had for more than a year, which is very embarrassing for me to say, but I've been babying this account and it's something that we're going to stop. So that brings me on to what is my goals for the next week. The goal for this year is to get funding. That is the priority. That is the main focus. It's the main vision that I'm working towards and putting all of my time and energy is to get funding. I got this 25K challenge last year. It was free because I wanted in a giveaway. Now I'm going to stop babying it. We have the system locked down, and I understand that if the system doesn't work, it's because I didn't follow the plan. And if I followed the plan and I followed the system, even if it comes to stop loss, that's understandable because we know that the probability of it coming down, we can't control it. Maybe there was not enough liquidity. The next goal is to stick to the 1% to 2% risk per trade. So I'm not going to use a 0.05 lot size. I'm going to use a lot size that is actually risking 1 to 2% of the trade account. If my balance is at 25,000, which it is because we're back to break even, then that means my 1 to 2% is going to be roughly around that $100, $200 risk, $250 risk per trade. And that's exactly what we're going to try and use. Aside from that, that's the only thing that I'm focusing on for next week is to finally take the step up to move. Because at the rate I'm going, yes, we've ticked off the box. We've got a 4+1 checklist that actually works. I know how to utilize it. I know I'm gaining confidence with using it. I now need to make sure that I am not babying an account. I have to go with the flow and say, look, we're going to have to take the risk. If I keep babying the account, sure, I can get to pass the account, but when? So if I use 1 to 2% risk, at least I know that okay, you're actually using the proper risk metric and you will pass or fail sooner. You have to accept that fact. So that is the next move that I'm going to make on the chessboard because I know that if I stay in the same position, it's not going to get me anywhere anytime soon. And the whole point of me doing this is to challenge myself, to force myself out of my comfort zone and finally just bite the bullet and go for it because without risk you're not going to get anywhere at all. So that's the goal. We're really biting the bullet here. I'm being as transparent as possible. This is an evaluation account, it is not funding, and my goal is to get the funding. And that's a wrap. Thank you for watching.